Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host at AlgoBot, and in today's video we're studying an expert advisor called Deviation Reset Continuation. This is a trend continuation approach built around a single, elegant idea, measuring how far price has stretched away from its own moving average baseline in units of volatility. Over the next few minutes you'll learn how it defines a trend, how it waits for a pullback, and how it looks to join the move as it resumes. Everything here is educational information only, so let's dive in. Let's start with the big picture. Deviation Reset Continuation is an expert advisor, or EA, that runs on the MetaTrader 5 platform and works on a single chart time frame of your choosing. It was designed with trending markets in mind. Think foreign exchange majors, metals like gold, or stock indices, on the 30-minute through 4-hour charts, though nothing about the symbol or time frame is hard-coded. At the heart of the strategy sits one measurement the code calls the stretch. It takes the distance between the closing price and an exponential moving average baseline, and then divides that distance by the average true range, or ATR. Because it's divided by volatility, the stretch is scale-free. It reads the same way whether you're looking at gold near 2,000 or a currency pair near 1.08. That's a deliberate guard against overfitting to any one market. The philosophy here is continuation, not reversal. Healthy trends rarely travel in a straight line. They push out, pause, pull back toward their baseline, and then continue. This strategy does not try to fade the extension. Instead, it waits for the pullback, the reset, and then aims to join the move as it resumes, always in the direction the baseline is already sloping. On the risk side, the EA keeps things bounded. Every trade carries an initial stop based on a multiple of ATR, and a take-profit set as a reward-to-risk multiple of that stop. A trailing stop follows the trade, tightening only in the trade's favor to protect open gains. The strategy holds just one position at a time, no averaging, no grids, and it sizes positions as a fixed fraction of the account balance, clamped to a hard ceiling. This makes it a study in disciplined, rules-based trend trading, suited to traders who want to understand structured automation. Remember, this is educational information, not a recommendation. Now let's walk through the exact logic, step by step. The strategy is a small state machine that only acts on closed bars. It never reacts to a half-formed candle, which keeps its decisions stable and non-repainting. The first step is regime. The EA looks at its exponential moving average baseline, set by default to a period of 34, and measures the baseline slope over the last 5 bars. That's the slope loopback parameter. If the baseline is sloping upward, only long setups are considered. If it's sloping downward, only shorts. If there's no clear slope, the strategy simply stands aside and takes no trades. The second step is ARM. While the regime holds, the strategy watches the stretch, that volatility normalized distance from the baseline. When price pulls back toward the baseline so that the stretch falls to at or below the pullback depth, which defaults to 0.3 ATRs, the setup becomes armed. In an uptrend, that's a dip back toward the moving average. In a downtrend, it's a rally back toward it. This is the reset the strategy is named for. The third step is resume. Once armed, the strategy waits for the trend to re-extend. For a long, it needs a bar that closes higher than it opened, closes above the previous bar's high, and pushes the stretch back up beyond the resume level, which defaults to 0.6 ATRs. All three conditions must line up. The short side is a mirror image, a bar that closes lower than it opened, closes below the previous bar's low, and pushes the stretch beyond negative 0.6. If either the regime flips or 6 bars pass, the max weight bar's limit, without a resumption, the setup is abandoned and the strategy returns to scanning. When an entry condition is met, the EA places its stop at 2 times ATR away from entry, and its take profit at the reward-to-risk ratio, by default 2 to 1, times that stop distance. From there, a chandelier-style trailing stop takes over, set at 2.5 ATRs behind price. It only ever ratchets in the trade's favor, never loosening, which locks in open profit and trims givebacks if the move stalls. The strategy holds a single position until the stop or target is reached. That's the complete cycle: regime, arm, resume, manage, exit. Let's look at the actual MetaQuotes language code the EA runs, as you'd see it in MetaEditor. At the top are the inputs, the dials you can adjust. BasisPeriod is the 34-period EMA baseline. ATR-period 14 drives both the volatility normalizer and the risk unit. SlowPullback measures the regime over 5 bars. PullbackDepth and ResumeLevel 0.3 and 0.6 are the ARM and resume thresholds in ATRs. StopAtrMult and RewardRiskRatio set the stop distance and the 2-to-1 target, and ATR-multiple sets the trailing stop. Below the inputs is the single most important line, stretch equals close minus the EMA divided by ATR. That one expression is the whole engine, price's deviation from baseline, measured in units of volatility. Now the long block. The condition reads, the signal bar closes above its open, its close is above the prior bar's high, and the stretch is greater than or equal to resume level. When all three are true, the code calls trade.buy, passing the volume, with a stop placed one stop distance below price and a take profit at the reward to risk multiple above. The short block is the exact mirror. The bar closes below its open, closes below the prior bar's low, and the stretch is less than or equal to negative resume level. Then the code calls trade.sell, with the stop one distance above price and the take profit the same multiple below. Notice both sides are fully symmetric, the same rules, simply flipped. That symmetry is what keeps the strategy consistent across rising and falling markets. Let's bring the logic to life on the chart. On the price panel, you can see the candles along with the EMA baseline drawn through them. That's the moving average the strategy measures everything against. In the panel below sits the stretch, our volatility normalized distance from that baseline, with dashed lines marking the ARM level at 0.3 ATRs and the resume level at 0.6, both above and below the zero center line. Watch the opening candles. Price is climbing and trading well above the baseline, and the stretch down below is riding high, above the upper resume line. The baseline itself is sloping upward, so the strategy has established an up regime. It will only look for long setups here. Now the market does what healthy trends do. It pauses and pulls back. Over the next couple of candles, price eases down toward the baseline, and the stretch falls with it, dropping through the ARM level toward the zero line. This is the reset. The strategy takes note and arms a long setup. It's now waiting, patiently, for the trend to prove it wants to continue. Then comes the resumption candle. Look at the buy entry marker. This bar closes higher than it opened, and crucially, it closes above the previous bar's high, breaking back out of the pause. At the same moment, the stretch climbs back above the 0.6 resume line. All three conditions align, and the strategy places its long entry right there. Its protective stop sits below, 2 ATRs under price, and its take profit target is set above at twice that distance, a reward to risk of 2-to-1. From the entry, price extends higher through the following candles, exactly the continuation the strategy was waiting for. The stretch pushes to its highest reading of the sequence as price runs into the take profit target, and the long trade is complete. Notice we never tried to catch the very top of the first push. We waited for the pullback and joined the resumption. Now the character of the market changes. Price rolls over, the candles turn down, and the baseline flattens and begins sloping lower. The regime has flipped to down, so the strategy now only considers shorts. Price trades below the baseline, and the stretch falls deep beneath the zero line, into strongly negative territory. Again, we wait for the reset, but in a downtrend, the reset is a rally. Price bounces back up toward the baseline, and the stretch rises back toward zero, lifting through the lower arm level. That arm's a short setup. The strategy is now waiting for the downtrend to resume. The resumption arrives at the sell entry marker. This candle closes lower than it opened, closes below the previous bar's low, and drives the stretch back down beyond the negative 0.6 resume line. The mirror image condition is satisfied, and the strategy places its short entry. The stop sits above, 2 ATRs over price, and the take profit is set below at the same 2-to-1 distance. From there, price falls away through the final candles, the stretch sinking to its most negative reading, until price reaches the short take profit target, and that trade closes as well. 2 trades, both taken in the direction of the prevailing regime, both entered on a reset and a confirmed resumption rather than a guess. That, in a single picture, is Deviation Reset Continuation at work. Let's wrap up. Today we explored Deviation Reset Continuation, an expert advisor for MetaTrader 5 that measures how far price has stretched from its EMA baseline in units of volatility, waits for that stretch to reset during a pullback, and then looks to join the trend as it resumes, always in the direction the baseline is already sloping. We covered its regime, ARM, and resume logic, its ATR-based stops and trailing exits, and we watched both a long and a short example play out on the chart. Please remember that everything in this video is educational information only and not financial advice. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment, and subscribe for more MetaTrader 5 strategy breakdowns, and visit us at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.